Okay guys, welcome back and welcome to the final installment of this video series. And if you remember at the beginning of this video series, I said that I would show you how to go from living paycheck to paycheck to becoming completely debt free and building and owning a 7-figure property portfolio in just over a decade. Let's leverage the tools that we have available here on our new chessboard to create financial independence. And this is where you go a little bit deeper with your financial education. You learn more about real estate investing and how it actually works. And you could, in this illustration, you could take this line of credit, $25,000, write yourself a check for $20,000 and buy yourself one of these, which would be your first single family rental property. And this property here has a market value of $120,000. So it leaves us with a mortgage of $100 grand. And this door is going to cash flow $400 a month, which we can add to our cash flow number. So it brought us up from 38 up to 42. And now that we've racked up 20 grand worth of debt here on our line of credit, what are we gonna do? We're gonna start leveraging this velocity banking strategy, where now you got $5,400 hitting that line of credit every single month. You know, you have a renter in this property, taking care of the debt service payment, right? So that's where the cash flow comes from. So again, barring any emergencies with that, barring any emergencies in your life, it's gonna go down by our cash flow number every single month. And so this 20 grand will knock this down in about 5 months. And guys, this is 20 grand worth of mortgage principal reduction, okay, at the front end of a loan. So we know the kind of interest that we just saved by doing this. If we're able to wipe it out in 5 months, go ahead and rinse and repeat. Grab another 20 grand off that mortgage, rinse and repeat that process. You would be able to pay off this first rental property in about 2 years, leveraging this velocity banking strategy. And so that'll change our numbers again. That'll get rid of the mortgage on the first rental property here. And so it increases our cash flow on there up to $1,000 in this scenario. And so it's gonna bring us up to a cash flow number now with our job of about $4,800 per month. And so is one little rental property enough for us to achieve financial freedom? In most markets, probably not, right? But what can we do now? Right? What other tools do we have available? I mean, sure, you could do another one with using the small credit card here, but what about this primary residence, right? What about this asset you have here? You have a fully paid off primary residence. Could you leverage that to build wealth? And the answer is yes. Let's stick it up here. Again, we're 8 years down the line, so the chances are this property has appreciated quite a bit, but let's just say it's still maintained its $200,000 value. This is a very good credit scenario for this average American household. You could easily walk into a bank. They're going to try to offer you a mortgage, but now that you know better, you're going to say, nope, I don't want the mortgage. I don't want the lump sum. What I want is the tool. I want the revolving tool. Let me get a home equity line of credit on my primary residence. And again, in this good credit scenario, easy to see that you could get a 60%, $120,000 line of credit on this property. And guys, using your new real estate education, again, go out there. You need to learn more about real estate investing to really do this. But how many $20,000 checks can you write with a $120,000 line of credit? Well, you can write 6 of them, okay? And assuming the same numbers as above, you could get 6 more rental properties. And assuming the same numbers, guys, exactly the same, that would give you an additional $2,400 per month in cash flow coming into your life and into your business. Okay, bringing us from 48 up to $7,200 per month, every month in cash flow. And so again, we paid off the credit card, $25,000 line of credit down to 0. You can put that in the drawer for now, because now we're playing with this big fat home equity line of credit that you just racked up $120,000 worth of debt on. What are we gonna do now? You're gonna start leveraging this velocity banking strategy, where now you have all of this income knocking down this line of credit every single month, all of your expenses coming out. Okay, and again, barring emergencies, it's gonna go down by your cash flow number every single month of $7,200. So running the illustration forward, you'd be able to sweep down this initial 120 grand in about 16 months, leveraging this velocity banking strategy and barring emergencies. And by running the number, and then you just grab another 120, again, you got renters in these properties actually making the actual debt service payment, right? So you're able to grab another 120 off and rinse and repeat. Bottom line, guys, is you'd be able to pay off this additional 6 property portfolio here in about 5.5 years, leveraging this strategy. And that would give you a total of 7 rental properties paid off free and clear in just about 13.5 years. okay, using this strategy. Guys, we were able to do this without changing your spending habits, without earning any additional income. Imagine if you were bringing in additional income on the side. Maybe you're doing some wholesaling, you're flipping houses on the side. That would make this whole scenario move much, much quicker. But we wanted to do this using everything exactly the same. Okay, so we didn't earn any additional income. We just simply applied the velocity banking strategy. And so after about 13 and a half years, here's how we ended up. We ended up with a cash flow number of about $10,800 per month. So at this point, you could easily walk away from your job and still have $5,800 per month in cash flow coming in the door. Okay, and on the side of that, we have some additional benefits here. Okay, guys, at this point, you have now over $1 million worth of leverageable assets, and you have all the equity. None of these assets have debt. Okay, so and since you own rentals, you're getting incredible tax advantages like depreciation along the way. Rentals actually lose money on paper, so they're fantastic to offset some of your W-2. You're building a legacy for your family. Imagine handing down a portfolio of properties, when you die. And in the meantime, you're creating a much more secure cash flow retirement for yourself. And how does that sound for a retirement plan? Versus the cash accumulation model that we're all taught. You would have to save up nearly $3.5 million in an account somewhere to be able to pull off 10 grand per month in retirement over 20 years. At your current rate of retirement savings, do you have enough time left to get to where you want to be financially? A good friend of mine, Mitch Nelson, says, when knowledge increases, behavior changes. And now that we have increased your knowledge, you can change your financial behavior to maximize your cash flow, create massive leverage so you can save thousands of dollars in interest using the velocity banking strategy.